Hi there, and welcome to Workamajig's Intercompany Transactions feature. The purpose of this video is to show how mapping relationships are set up between separate companies within your organization and how that mapping would then allow you to carry out intercompany transactions and general ledger postings between them. In Workamajig, separate financial entities are set up as GL companies, general ledger companies, and each company will have the appropriate security rights and restrictions regarding who can access what type of data for each of the specific companies. By default, the system enforces a separation between the companies and will not allow you, for example, to create a vendor invoice for one company and have it be paid for by a different company. However, in Workamajig, you can set up general ledger company mappings that allow intercompany activity across the general ledgers. The mapping setup starts with each company needing to have matching asset and liability accounts. A relationship between company A and company B requires 4 general ledger accounts to specify a set of due tos and due froms as assets and current liabilities. An asset to company A is for something due from company B, and an asset to company B is for something that is due from company A. Basically, each company has an asset account for items due to them from the other company. And the same applies for the liability side of things. A liability to company A is for something that is due to company B and vice versa. A liability to company B is for something due to company A. For intercompany mapping purposes, these additional accounts are not set up as accounts receivable and accounts payable account types. And the reason for that is to keep the aging reports accurate and in agreement regarding the actual monies that are due in for client billings and due out for vendor payables on behalf of each of the companies as a separate entity. In essence, the internal decisions about who should have what portion of a receivable or be responsible for a portion of a payable is getting tracked between companies as assets and liabilities. For those firms that have a high volume of activity between their separate companies, this feature would eliminate the need to create invoices for each other, book them as accounts receivable and accounts payable, and then make payments to one another. Once the asset and liability accounts are set up, they're used in the mapping of GL companies. And this setup is going to require that there is a source company and a target company. The first row illustrates the setup for company A as the source and company B as the target. And then the second row, other way around, where transactions are being originated by source with company B and the target is to company A. For each of the source to target mappings, there needs to be all of the following setups for accounts payable due to and due from, and also accounts receivable due to and due from. So accounts payable due to company A is a liability to company B. And then the account numbers, of course, are in the drill down behind the account description. So you would just continue going through down the line, setting up the accounts payable due from company B as an asset to company A, and the same for the accounts receivable due tos and due froms. And then the due tos and due from accounts can also be used for journal entries. Workamajig does not allow for intercompany transactions between companies unless there is a specific direct map set up to do so. So for example, if you have 3 companies, A, B, and C, but you only have a relationship set up between company A and company B, you cannot do intercompany transactions between company A and some company C or between companies B and C without having that mapping relationship established between them. Once mappings are in place, transactional decisions can start playing out. And here we have an example of an intercompany expense transaction. Company A and Company B operate out of the same building in a shared rent scenario. In this case, Company A is paying the rent entirely and is therefore the source company being displayed in the header, which is the top portion of the transaction. Rent is $5,000 and they split that evenly. The lines detail of this transaction shows the target company's portion, each of the target company's portion of the expense. One line targets company A and the other line will target company B. And then the general ledger posting details shows the full amount, 100% payable by company A, and then the intercompany due from and due to are posted according to that mapping setup. And then each company has a default expense account for posting the rent expense to the general ledger. Another type of intercompany transaction is client invoicing. For this scenario, both companies, A and B, work on a project, but only one company gets to bill the client. Company A does the billing and books the accounts receivable due from the client, but a portion of that is due to Company A from company due to Company B from Company A. Again, the mapping setup between the companies streamlines the tracking and the posting of this. And then each company has their revenue posted according to the work that they did on this project. $1,500 for Company B's revenue, and the remainder is Company A's revenue. For financial reporting, the balance sheet can be run for one company at a time or for multiple, a selection of multiple companies, and that would be a combined reporting. When the balance sheet is run for Company A, there's a balance here of $2,500 in the due from Company B asset account. This is coming from that expense transaction for rent. And then there is also a $1,500 liability that's due to Company B for that client invoice billing. There are audit trails behind these numbers with a drill down into the posting details. Each transaction has a reference number highlighted in blue, and each transaction can be jumped into for further analysis of the audit trail. All of the checks and balances are here in Workamajig for visibility into who's doing what on behalf of each company. On this particular invoice, there is a payment that has been applied, and the audit trail of the financial transactions continues from here with the receipt information, how it was applied to what invoice or invoices, and the end result of the general ledger postings is an increase to cash and an offsetting entry to relieve the accounts receivable for the invoices that this money is applied to. As far as intercompany asset and liability balances are concerned, some agencies using this feature may just let this go back and forth without ever clearing or satisfying the settlement of due tos and due froms. Other agencies may clear this out at year end with a journal entry, and others may only clear this out if there is a potential sale of one of the companies. So in closing and in summary, Workamajig provides a process-driven system setup for maintaining healthy relationships between separate financial entities that coexist within an organization. So you set up your intercompany mappings and track the transactions and postings from there. Thank you for your interest in this topic, and please contact your account manager if you have any questions or would like to schedule a training for getting intercompany mappings set up in your Workamajig. Thanks again.